Good evening, Dumelang, Sanbonani. Welcome to our annual Soweto Talk to the SARB Forum. My name is Yolanda Vacha, a proud Sowetan, and I will be your program director for this evening. I see many familiar faces in the audience, so I'd like to welcome those who are joining us for the first time as well. And I'd like to just say welcome to our university and high school students. We hope that you will find this session engaging and valuable. We also have people that have joined us online, and we will be taking their questions as well during the session. The Soweto Talk to the SARB Forum gives us an opportunity to tell you about the work that we do in the SARB. What's new from the last time that we were here in your neighborhood, and to hear about some of the issues that you may have for us. Now, I must remind you that we're the South African Reserve Bank, and we are only really able to answer questions that relate to the work that we do. However, we are always open to hearing some of the concerns that you may have on your mind today. Let me first introduce our MPC members who are here today. I've got Governor Lesetja Kganyago on my left, Deputy Governors Rashad Kasim, Fundi Chazibana, Mampo Modise, as well as David Folks, who's the advisor to the governors. I'm now going to hand over to the governor to say a few words. Over to you, Governor.
Thank you very much, Yolanda, and good evening, good afternoon, Dumelang. It's always good to be back in Soweto. And when I got here and I was told that I must do some few opening remarks, but one of the attendees said to me, how is this war affecting us? So I thought instead of doing opening remarks, I will talk about how we see the current situation. And maybe before I talk about the current situation, I should just talk about how things were getting better in South Africa until the 28th of February. So Yolanda said that we only talk about the SARB. Of course, the SARB only talks about money because that is what we do. We insert ourselves in your pockets with the banknotes and the coins that you carry. If you check on them, they are written South African Reserve Bank. And the only reason you carry them is that when you offer them to somebody, they will take it. And if you leave them unattended, somebody else will attend to them. But before the outbreak of the war, this is where South Africa was. We were seeing a decline in inflation in South Africa. We were having successive declines in petrol prices, and inflation was getting well contained. The Minister of Finance had tabled the budget, and by all measures, the budget was accepted as a very prudent budget, and that by the end of March this year, our debt would reach a peak and then begin to decline. And just talking to lots of investors over the years, one of the things I had always said to do was to carry a chart of how many days of load shedding we are having and how many times we are having load shedding a day. And then I spent the whole of last week in Washington talking to investors, and no one asked me how many days of load shedding we have had. So for a long time, we had been without load shedding, and we were now basically now taking it. This is how life is. So things were in a good space. Our economy was beginning to grow. Yet, although it was creating jobs, still it was not creating jobs at the pace that we would like to see. So things were in fairly good space until the war broke out. And the war broke out. I can't tell you when the war will end. That's not what we do in the Reserve Bank. What we can talk about is the impact of the war on the economy. And the channel through which this comes through the oil price. For those of you who drive, I'm sure around on the 31st of March, you were all running to the filling stations trying to top up your tanks because you knew there was a big price increase that was coming. And I don't know any of you who have filling stations, but those who had filling stations pretended that they had run out of petrol so that they can sell it to you the following day at a higher price. And it was beginning to be felt that this is going to be a big shock for South Africa. And we saw that coming through the fuel prices. And fuel is very important because lots of other goods that we distribute across the economy actually need fuel. But the food we eat too, the farmers need diesel to operate their equipment on the farms, and which then means that they feel that cost, and at some point they will pass those costs through. Of course, what we had also seen is that the prices of other farming inputs, importantly fertilizer, was going up. But fortunately for South Africa, is that the planting season was already behind us. But we are going to feel it later in the year when the planting season starts again, because unless those prices of fertilizer comes from. Well, in South Africa, at least then, we have the fuel, even if we have to pay more for it. But elsewhere, people are talking about fuel shortages, especially in Asia, because the shipping corridor through which they receive the oil is actually closed, the Strait of Hormuz. And so whilst we are feeling the pain in South Africa that the fuel price is high, at least we have it. This prompted government to try and provide some relief, and so the Minister of Finance announced a reduction in the fuel levy of 3 rands a litre for 1 month to try and cushion the South African households. We do not know how long this conflict is going to last, but how you are going to feel that is through the fuel prices, maybe later through the food prices. The attitude of the South African Reserve Bank with things coming this way, we treat them as a shock, and we hope that it is temporary, in which case that if it is temporary, there is nothing for us to respond to. But if it becomes persistent, we end up having to respond to that shock. So, in a nutshell, that's how we are feeling the effects of the war. It does come through the households' budgets. We are all having to tighten our belts because the budgets are now under strain. And for those who are not driving, who are using public transport, you will feel it. You will feel it there because taxi fares, bus fares, they are all going up. Let me leave it there and say that, of course, besides worrying about this inflation, there are other things. We protect your deposits. We make sure that if you have got policies, that the institution that you took policies from are able to meet their obligations. So feel free to ask any of the questions in that respect. But as Yolanda said, ask us the questions that we can respond to. Of course, if you have other concerns and you think that we must go and tell ministers that you have got these concerns, we will carry them there, but we cannot help you in addressing them. Over to you, Yolanda.
Thanks, Governor, for those opening remarks. And ladies and gentlemen, Governor says we must tighten our belts. I don't wear belts anymore. So we are now going to start with the question and answer session. Before you make your comment or ask your question, can we kindly request that you give us your name and surname as well as the organization that you are representing. We'll take 3 questions for per round, and once the panel has answered all the questions, we'll go to the next round. Can we also ask that you please keep your questions brief so that we can get to all the questions in the room? So let us launch straight into the question and answer session. We've got roving mics on either side of the room, so please. We've got gentlemen over there on the left, and we've got a gentleman on this side with the blue jacket. Gentleman over there on the left, you may start with your question. Oh, okay. I thought
Quick one here. My name is Dan Mahasha. Mulawedi, Limpopo, royal blood, and Soweto currently. And before I can say anything, let me give you, for those people, the benefit for those people who doesn't know. I'm an activist. I'm a professional. I'm a businessman. Very shrewd one. No short left, short right. The governor, we know each other when he was still a Director General within the Treasury. That was in the 80s. Black Management Forum, for those who are familiar, BMF, we were together. I was handling the portfolio for individual and corporate membership, where I was doing marketing for big corporation. I left the industry 20 years ago, more than 20 years ago. First off, before I can say anything, the governor, let me congratulate him and his team. One, for being reappointed for the second term. Job well done. The concern, which I think you need to pass it over to the politicians, is states of the country. Post-1994, lack of public participation, consultation bill, almost 32 years. Why are you having keep on importing? South Africa and Africa is rich in everything. I'm coming from the apartheid. The state-owned enterprises, e.g. Sasol, and others. Why should we keep on importing? Why should we? When are you going to know? Do things on our own. If South Africa and Africa combine their head together, be visionary and planner and ethnic leadership. Unemployment, youth, 45% plus, overall 32%. What is happening in the country? The Zondo Commission, state capture. Now Magandla Commission, Madlanga Commission. You got problem, a lot of problem here, but you can jump into other countries. Rather than clean out your house. The union. What the hell are they? The profession. Tell these people, we are the customers. We are paying their salaries. There's no king or queen, pick and pay, bank, etc., without customer. Customer is a king. Right? That's the message. Bloated government, wrong appointment. Why Ruth Mayer was not appointed in 2020, 2018? He's part of the people who penal beat the constitution with together with Ramaphosa were present.
Ntate Mahasha,
Thank you.
Thank you.
Bye-bye.
Gentleman in blue here.
Good evening. Oh, it's on. Okay. Good evening. My name is Lesetja Kganyago. I represent the Tshwane University of Technology. So my question is based on theoretical economics. Like you said, Mr. Kganyago, Mr. Governor, that the shock is actually a supply shock, right? Theoretically, it means that the cost of productions is going up, which then affects the employers. Now, considering that remuneration, like salaries and wages, would not increase as much as, how will you then advise the government in trying to figure out ways so that people are not, do not run out of jobs? Because at some point, we're going to run out of reserves if the war continues. And hopefully it doesn't. But in cases where the war does continue, what measurements do you have in place so that our current unemployment rate does not go any further up?
Thank you very much, Mr. Munyai. One last question from the audience. We've got one just behind with the black jacket. Thank you.
Greetings, everyone. Greetings, everyone. I hope you're all well. My name is Bitumelo Rabete, representing University of Johannesburg, studying finance. My question to you is, through the Prudential Authority, the South African Reserve Bank supervises banks to ensure that they are safe for depositors. From an operational perspective, what is one key metric or red flag you wish every junior operations analyst in a commercial bank understood to make the South African Reserve Bank's supervisory work smoother? Thank you.
Thank you very much. I'm going to hand over to the panel to address those questions. Thank you.
You know, we do have an economics teacher on the panel, so he will deal with the theoretical question, and we have the CEO of the Prudential Authority who will deal with that, and then David, you want to deal with this thing about the nature of the shock and what advice we can give to government and whether we will run out of reserves and what mitigations do we have to respond to the crisis. But Ndate Mahajani was giving us compliments, and thank you very much for those compliments. And then, of course, we will pass the message through. Shall we start with you, Rashad?
Yeah, thank you very much. So, you know, to answer the question you asked, which is a very good question, there are a few things one has to understand. The first is that when you think of an economy, which you've learned at university, you separate what is a long-term trend, a structural trend in the economy versus what are cyclical trends. So in monetary policy, what we want to do is, you are right, you know, monetary policy works very effectively when there's a demand shock. In other words, the economy goes down, wages go down, consumption is down, and inflation goes down because of the demand shock, and we increase the interest, we decrease the interest. So if it all goes up, if the demand surges and we increase the interest rates, we're very effective. That's when monetary policy is most effective. But as you rightly say, a supply shock means that a number of things can happen. Oil prices in this case have gone up. And now what in essence oil prices do, when oil prices go up, it means all of you spend, your expenditure switches away from clothing, from entertainment to the oil price. So we all become poorer in that sense. The next question for us is, in this process, the growth side of the economy is affected because the consumption has gone down in what we call discretionary products that I just outlined. And in the process, we as the Monetary Policy Committee have to make a call as to whether we think that if growth goes down, it will offset the rise in inflation coming from the oil price shock. In a perfect world, if other goods prices go down and the oil prices go up, we may have to do nothing because inflation will remain the same. The most difficult jobs we have is if inflation continues to go up, and despite the negative growth effect, it is not compensating for inflation going up. We then have no choice but to tighten monetary policy. And that then contracts the economy further, and that leads to job loss. But if we didn't tighten, the job loss would be greater later on if inflation just picks up more. So in economics, you learn this concept called intertemporal. You make short-term decisions that may not be good, but in the long term, you're better off. And it's very hard to convince people about this trade-off that we often make. But this is, when I used to teach at university, I would talk about this in 1 hour. I've given to you in 3 minutes. Sorry. Yeah.
Thank you very much for your question on how to make our jobs easy. So when we give a license to a bank, we're giving a license to a bank that has got money of its own, and the bank says, look, I'm going to start this business, and because I'm starting this business and I'm going to hire this group of people, you can allow other people to come and give me their money. I'll manage it for them. And our job when we give the banks the license is that they must protect your deposit. But the bank has got to make money. So what does the bank do? They take your deposit and they lend it to your neighbor. Now, if there is one thing that a bank or a banker analyst needs to know, it's this asset and liability management. So your money in a bank is what we call a liability because the bank owes you your money, but the bank has got to make assets, they've got to make money, so the loan that they give to the other person is going to be an asset to the bank. So to answer your question, this asset and liability matching that a bank needs to make sure that if it has lent your money to someone, it is able to recover your money back. This is the most important thing. And then, of course, the sweet spot for the bank is if it can make more between you and your neighbor, because that's what the bank keeps as a piece of profit. But for us to make our jobs easy, it is to make sure that there is this matching at all times, that the banks are able to pay your deposits back because they don't know when you're going to come and ask for your money back. So if they've taken your money and they lend it to your neighbor and they say to your neighbor, you can pay us back over 20 years, but Dumelo goes to the bank tomorrow and says, I want all of my money. A bank needs to know how to match these two things and how to make it sustainable so that you are able to get your money back. Because when we get to the situation where you can't get your money, this is when we intervene as a prudential authority to say, we need someone else, or now it's now DJ Modise who intervenes as the resolution authority to say, we now have a problem, we need to fix a few things. So I hope that answers your question. Thanks.
We go to David. DG Mampo, you and I are going to have to share Ndate Mohajani's things. You know, he wants to know why we are importing when we are so rich, and so you've got to deal with that. And if you have got anything to say about employment, and then you can pass whatever you don't want to respond back to me. David.
Any second now, there we go. So I got the question about running out of reserves, and I guess I'm not sure exactly which reserves we're talking about. I can think of two kinds. It could be foreign exchange reserves, it could be oil reserves. So I'm just going to answer both and hope I get them. So on foreign exchange reserves, actually South Africa's foreign exchange reserves are sitting pretty much at all-time highs. I don't care how the oldest person in this room, we have more foreign exchange reserves than we've ever had in the lifetime of anyone here, both in absolute terms and as a share of GDP. We don't intervene in the currency. And interestingly, the rand's actually holding up surprisingly well. If you looked at the exchange rate right now, it's sitting where it was the start of the year before the shock. If all you knew about was the exchange rate, you'd think there hadn't been some war. So it's interesting how the rand has recovered. It's been surprisingly resilient. On oil reserves, in case that's what this is about, South Africa's oil reserves are sometimes described as being a bit on the low side. We've been in a place where a lot of the oil that we import comes from Angola, comes from Nigeria, and so obviously they're not affected by the closure of the Strait of Hormuz. So that supply is held up okay. The countries who've really suffered have typically been Asian countries, which are very reliant for gas and for oil on the countries in the Gulf. And so they've had shortages. They were expecting a big tanker to come through, and the tanker just doesn't come because it's stuck in the Gulf. And so they've really had shortage problems, and now you're starting to see headlines about maybe an airline's going to have to shut down, about people being rationed, you're not allowed to drive, you're not allowed to run your air conditioning, things like that. So that's been a kind of Asian story where shortages have shown up. For us, I suppose, the shortages haven't really been an issue, despite the relatively low reserves, because of this pretty straightforward supply connection. There's been some concern about reduced refinery capacity, but again, hasn't turned into a shortage story. It's really the price impact that's been hitting South Africans very hard, just that enormous increase in fuel prices. It's actually, the jump in fuel price inflation is the largest in the history of inflation targeting. We went from like minus 8% or something like that in March, and we think we're going to be to positive 11% in April. It's like a 20 percentage point jump. We've never had one that big. Okay, thank you.
Mohajani, your questions, when I was at Treasury, I would have gone to town to try and answer why we have unemployment, how to deal with it. So I will contain them since I jumped ship. So we import commodities that we don't have. So even if we reach in gold, in other commodities, but we don't have oil, so we have to import oil. Another reason why we would import would be if the cost of those goods are cheaper elsewhere, and we can import them, we import them to make sure that at least our consumers can access those goods, or we introduce competition, because if there's competition, then there will be the prices will be lesser. So there's different reasons why we import, but the most fundamental one is that we can't produce everything ourselves, and we have to go to other countries who have those goods so that at least we can have the goods. And one example of that will be oil. The system has to work as a system. So all parts of the systems have to function. So for monetary policy, what we have to do according to the Constitution is to make sure the prices are stable and they are low. That's what we have to do. By us doing that, it means the cost of doing business for investors is also low and stable. So they can invest in our country, they can invest more, and that will create jobs. If you don't have a functioning system, then even if you fix one part of the system, the other ones are going to drag on that. So in the MPC statement, we always say While the SARB is ensuring that there's price stability, there's structural reforms that need to be implemented by the rest of government. So if government does its part, it fixes municipalities, it fixes other SOCs, they do investment, they deal with the infrastructure, whether you're looking at ESCOM, Transnet, water. If that system works, then combined with what monetary policy does, then the jobs will be preserved. But basically, the whole system has to work, not a few parts of the system.
Thank you. She left nothing for me.
Thank you. Thanks, panel members. We've got a question at the back there. We've got 1, 2, 3, 4 at the back. We'll just take the 4 on this side, and then I'll come back to the others next round. You can start here. You've got the mic right here.
My name is Sizwe Squia, and I'm from Mzimhlope, and I'm an economics learner at Comprehensive. I have a question based on the effects of the war. South Africa is obviously facing shortages of oil due to the war. And since South Africa is facing shortages of oil, it will affect the productivity of some of the businesses and other things in the economy. And does the government have measures that will sustain South Africa's oil until the war ends, or are there other measures that could be taken?
Thank you. Next question. Please go ahead when you get the mic.
Greetings, everyone. My name is Mpilombata. I'm from Orlando West in Kilan. Dr. Rashid said when interest rates are increased, they are the most effective solution. So I would like to ask, when does the MPC use the other instruments like cash reserves, moral suasion, or open market transactions?
Thank you. Third question, please. We have a gentleman there with the black jacket. Thank you.
Good evening, and thank you, Governor and the team, to keep on honoring Soweto. I have 2 questions, but I think I'll match them. Firstly, the issue of the bank licenses. We are in the township. We're running the economy township-based, but our core money is with the banks, stokvels. Stokvels are having money, but all that money is under the banks. When we check, if I'm wrong, please correct me. The last gazette for the stokvels was in May 2012. Unless there's another gazette, which was Notice 404. And on that gazette, there's a registration threshold for stokvels that do not hold aggregate contribution of exceeding 100,000, so that they can be then under the regulatory body, which is NASASA. And we only have one regulatory body in South Africa, with a big number of stokvels that we're having. Number 2, what is the limit, maximum ceiling for banks to accept money from individuals or from the stokvels? Recently, fortunately, I had an opportunity. There's a stokvel that it's having about 2-3 bank accounts. Within a period of a week, 2 banks closed, flagged those accounts because of money was coming in. Now, I'm trying to find out, Governor and the team, how are you dealing with our 50 billion stokvel money, which is within the banks, so that we can be able to work around it on our own without having only a limited regulatory body, allowing also us to a little bit reduce the restrictions of the CFIs. The CFI's restrictions are too hard, while the government authorized stokvels as community-based financial organizations. That's how it comes. Community-based financial organizations. Now, we really plead, please give the eyes to the stokvels. We want to work with our own money. We want to work with our own money. And that will also allow youth. Youth is not interested in stokvels because they don't understand. But they are interested in stokvels in the fintech space. They want to use money, but they want to use the fintech. Now, can we please plead for our Reserve Bank to please take care of the stokvel money? We want some relief.
Dade, we didn't get your name.
My name is Hector Sigidi.
Thanks, Abu Hector. There's a gentleman at the end there that would like to get a question in. Thank you.
My name is Selone from Pimbil. My first question would be the financial sector. How far is it, in the last 5-10 years, how far is it transformed, taking demographics into consideration? And is it measurable or quantifiable? And if it has not transformed enough, what are the reasons? And then the second question is on the township economy. It's also related to the question from the last gentleman. People who are players in the township economy, do they have financial literacy? Is there any intentional training to those people to enable them to develop and to grow? Because if you look at township economy, there's no infrastructure, there's no structure. People are just trading, and their monies, they take their monies to the bank, but the money is not plowed back in terms of an enabling environment so that it can facilitate growth and development. For instance, you find a person who's selling food. There's no running water. There's no, any hygiene instruments. So the township economy, is it benefiting those players, those township, the people who generate it? Thank you.
Thank you very much, Ndata Sillo. Sizwe, your question was in Governor's opening remarks, but if they'd like to add a little bit more to that, maybe they'll do at the end. But Governor, we've got the other three questions from below Hector and Ndata Sillo that you can give to the panel members.
Okay, I think maybe Sizwe just wanted me to repeat it. But I would like to link this to what David's response was when we asked about reserves. And what South Africa had always done was to keep a certain amount of strategic oil reserves, just in case. You would recall that we produce 30% of our fuel needs synthetically from coal via via SASOL. And so the difference we will have to import from from elsewhere. Now there is a cost in keeping the reserves. You can't try and keep the maximum and say that this is what I need for the next 3 years and try and keep it there, because those reserves do not earn interest when you are storing them there underground. Plus, the quality of the oil deteriorates. So you keep a number and then you rotate them. So you use them and replace them with new ones. That's how you try to mitigate. So across the world, different countries would have different standards in terms of how much reserves they retain. I know Australia say that they must maintain 3 months of their reserves. So different countries have got different marks. And in South Africa, we do not have a formal standard. It all depends on the Central Energy Fund. If you have heard about the Central Energy Fund, they are the ones who would manage those strategic reserves for us. And then, of course, there are measures to cushion the economy, which is very important. But there are also measures to cushion people, because the economy is about people. And hence, what you saw with the government's announcement of the reduction in the fuel levy was to try and cushion the households and from that shock. So that is what we would do. And then DG Rashad, clearly you are a good teacher. They keep on coming back to you. And Fundi, Soweto just loves you. I mean, every time we are here, they've got lots of banking questions for you. So I will give them to you once again.
Yeah. So what are the other instruments? Now remember that some countries, particularly the advanced countries, in the past had inflation almost at zero, and that means that their interest rates were almost at zero. So they used another instrument other than the interest rates, which is called a balance sheet instrument. What the balance sheet means is they find other ways to stimulate the economy. But these ways of stimulating the economy are not as effective as the interest rate. So firstly, for monetary policy purposes, to stimulate the economy, to tighten the economy, the interest rate tool, when you're not at what we call zero, when you where we are at the moment, 6.75 basis point, 675 basis point, is the best tool for monetary policy, for inflation, for price stability. Now, we have other tools, like you mentioned, cash reserve requirements. We have other, what we call prudential, and that's about preserving the financial system to make sure it's safe. The other tools play a different role. Our role in the SARB is not only to keep inflation at our target, but to ensure that the financial sector is safe. So we use other tools not for inflation purposes, but to complement the challenge. So why do we have a cash reserve requirement? Banks must have minimum reserves with us for the reasons you all talk about, so that, you know, when you use your Standard Bank card at a merchant who is with FNB, they've got to, you know, we through our payment system have to clear all those payments. So these are, some countries do use cash reserves to stimulate the economy in a very different monetary policy setting. But in our case, it's the interest rate. All the other tools are very important. For example, in the COVID crisis, we used a balance sheet tool. We bought government bonds to stabilize the bond financial market, and so on. Thank you.
Okay, so on Stokvels and the gazette that was mentioned, so if you keep money for other people, the question that the Reserve Bank always has to answer is, are you deposit taking or not? So this is the reason for the gazette, that if you receive funds from a group of people and you keep the money, that is considered to be deposit taking. So we have to issue a gazette that permits stokvels, that permits burial societies to keep your money without them needing to be classified as a bank. So it's an exemption from the Banks Act. And as you say, NASASA is the only body, so NASASA is recognized as a self-regulating organization in terms of that exemption. And what the Gazette tries to do is to set a limit, is to say, as a self-regulating organization, what is the limit of the amount that the institution can hold in a particular year? And also to say, if you are a self-regulating body, for what group of people can you hold funds? So when you set up a stokvel, you need what is called a common bond. You say there are 5 of us or there are 15 of us, and this is who we are, and this is the purpose for which we are holding the funds. And as a stokvel, you cannot come to Lesetja Kganyago, who's not part of your common bond, to now say deposit money, unless he becomes a member, and then the common bond is expanded. But as you rightfully say, a number of stokvels have got their funds that are saved inside other financial institutions. And DG Modise might, if she gets an opportunity, talk about the Corporation for Deposit Insurance and what we have had to do. Because if a bank gets into trouble, what we didn't have was a stokvel's funds were seen as one entity. But if there are 20 people in a stokvel, all of those people have a claim. And so what the Corporation for Deposit Insurance is looking to do is to say, if there is a problem in the bank, how do we look through so that the stokvel registers the 20 people, so that each of the 20 people can come to Cody to get their funds? So that's one part of your question. But the other has to do with NASASA itself. So NASASA has now registered as a cooperative financial institution, which means that they've got a mandate for deposit taking. And within the cooperative framework, you can start off as a cooperative financial institution. It's a slightly informal structure. Again, it's a common bond type structure. As you get bigger, you can graduate and you can become a cooperative bank, or you can graduate to become a mutual bank. So these are all these are all member-based institutions that exist. We used to have one cooperative financial institution that has graduated to become a mutual bank, and that used to be called the Young Women's Network. They started off and then they graduated. They now have a mutual banking license. So I think that the reason for the Gazette is, in our view, the Gazette still meets the objectives of the Gazette. Now, you might ask yourself, why 100,000, right? What is the limit for the 100,000 in the stokvel? Again, we like to limit risks as regulators and supervisors to say, if an entity is not deposit taking, they're not a bank, you want to limit the liabilities that might happen there. And if something goes wrong, you want to limit the amount of money that the stokvel members are able to lose at a point in time. But there is a conversation that is happening around funeral parlors and burial societies in terms of how they, in that segment, can get recognized within the insurance space. So I separate them from the stokvel conversation. But I'm very happy for us to continue and have the conversation outside. Now, the conversation on the township economy and the fact that the funds sit inside banks and they're not necessarily plowed back into the township economy is one that needs to be balanced. Because when you take the monies of other people, when you lend the monies to others or you invest the funds, you need to invest those funds in a very responsible way. Because when we have these discussions and we think about credit and we think about the investment side, we forget that there are human beings on either side. The depositors, when they lose their money, if the funds cannot be recovered from the creditors, or if the funds are invested badly, there are losses that can sit on this side. And our sense, if we look at banks, banks do make investments. Now, some of the investments that the banks make might not come back into the township economy directly. But if we look at who is lending money to government, who is buying government bonds, banks are amongst those entities that lend money to government, that allows government to plow back funds and to pay when there is a shortfall between what government is collecting in taxes and government has to borrow. Who else is lending to government? Pension funds. So those of you who have pension funds, your pension monies, your pension fund needs to invest some of those monies, and some of that goes to be borrowing to government as well. So they are direct plowing back into the township economy and indirect plowing back into the township economy. But we hear you that there are opportunities and other ways in which communities can get together. So member-based organizations like the cooperative financial institutions are structures that can work in this way, and we have a few of those, and cooperative banks are such structures as well that are member-based. And in other economies and other countries, some of them very large countries, these member bank financial institutions can become as large as commercial banks as well. So let me pause there for now. I hope that answers some of your questions.
Thanks, DJ. Let's go to this side of the room. Okay, we have one. You can start, sir, and then 2, 3 there.
Good evening, everyone. My name is Thabo Moatse. I'm from the manufacturing sector. I'm the metallurgist, MBA student. So my concern is with the cost of energy going up, already we can see that, the margins for the production, they are tight already with this rising cost. The first question is, how do you see South Africa staying competitive against imports? And does exchange rate really plays a role there? Secondly, do you see the role of financial system in making sure business can still access affordable funding to grow and create jobs? Lastly, Governor, do you think there's a real risk if this persists on these cost pressures, South Africa could start losing its manufacturing sector? I thank you.
Thank you very much, Abu Thabo. Let's do 2 and 3 there.
Greetings, my name is Sindisiwe Mahlangu. I'm a student from Tshwane University of Technology, Garangwa campus. My question is based on investments. As the governor said in the beginning that South Africa had a looking up economy going into the year, and in this perspective of South African investors, specifically South African investors, what advice would you give the investors who still wanna take the risk to invest within South Africa itself with the supply shock? Which approach should they take in terms of which entity, not specifically entities, but in which way should they go if they still want to further invest within South Africa, especially looking at the amateur investors that are going into the market and still wanna contribute to the economy via the investing portfolio way and don't have the diversity portfolio that people who have been in the industry have. So which approach would you advise to enter into it?
Thank you, Sindisiwe. And then the lady next to you. Okay, I think we'll stop it at the two and then hand over to the panel.
And Moatsi, Thabo, I'm glad to meet somebody involved in manufacturing. Manufacturing is a very important sector in the economy. Firstly, it absorbs a lot of low-skill workers. And if we are to crack the unemployment problem in this country, we actually need to be building our manufacturing sector. The trends, though, had shown that from the 80s, our manufacturing sector has actually been declining as a share of the economy. Now, there are a number of factors here. You asked whether the cost of energy and the impact on the manufacturing sector would impact on the competitiveness of the South African manufacturing sector. Well, it's not just in South Africa that it impacts this thing. All manufacturing around the globe gets affected. But you are a metallurgist, and your industry, if you are applying the trade in metallurgy, it's energy intensive, and so the impact you would actually feel. So we're going to have to look at the range of the inputs that you are faced with, the cost of energy for your manufacturing, the skills base that you have for your manufacturing is going to matter. The financing that you access and the cost at which you access that financing then matters. And once those have been sorted out and you are producing, you are going to have to sell. And Ntate Mohajani earlier on was talking about consumers. Then the consumers, your customers, come in. And the customers know one thing. They want to pay as little as possible for every good that they purchase. And if they can get it cheaper elsewhere, they will go there and buy it there. And you see them voting with their, I can't say with their feet, they vote with their hands, that even if that good that is being bought is an imported one, if it is cheaper, they will go and buy that cheaper good. Then two things then begin to come in. What kind of support is being given to manufacturing so that it is able to match or beat the prices of the imports? That's one. And the second aspect, of course, is the competitiveness of the exchange rate itself. Now, for a long time, South Africa had a high inflation relative to that of other countries. We had just only lowered our inflation target to 3%. It used to be 4.5%, and prior to that, we were just having this big range called 3 to 6. Now we have lowered this to 3%. 3% is very close to what the advanced economies target as their inflation, and is in line with the inflation target of other emerging market countries. So what it means is that at the very least, the rise in the costs in the South African economy would be rising at roughly the same pace as those of the other countries, and that becomes important. And so then we talk about the competitiveness of the currency, because now our currency is able to buy more here at home, and that is what you face. And lastly, of course, and earlier on we were talking to a group of investors or investment advisors who were asking us exactly about the long-term trajectory of the South African economy. So the fact that you have those equipment that you need for your manufacturing process, and the fact that you have got the workers that you need for your manufacturing process, the next question is, how productive are they? How productive are your equipment and how productive are your workers? And I put it simply as the following. If the workers in your factory, whatever product you produce, they are able to produce 10 of those products per day, and another manufacturer in another country, the same number of workers are able to produce 20 of those goods a day. That means those workers are more productive than yours, and they are going to undercut you in pricing. So that becomes important. And lastly is that the technology that you use, if the machinery that you are using, for example, is using a lot of energy, and your competitor has got a machine that uses less energy, even if you face the same energy price, they are going to outdo you. So those issues of competitiveness become very important. I should not be telling you this because from your background, you are a metallurgical engineer. This is exactly where you are confronted with. So you need a supporting policy environment. You need inputs that will make you competitive so that you are able to sell profitably. That deals with your questions. Does anybody wants to deal with investment advisors? We want to deal with that. Thank you.
Governor, before I deal with that one, there's the one that we missed in the previous round on financial literacy. I think, of course, there's different pockets of financial literacy, but as the SARB, we try to, have forums like this, where we meet with the public. We are quite busy on social media. We do press conferences, so we do try to reach out to the different stakeholders, whether you're looking at universities, we're looking at high schools, we're looking at the general public. And since the introduction of the Corporation for Deposit Insurance, I have, in my space, in my team, we have been very busy with the banks, just trying to make sure people can understand what the Corporation for Deposit Insurance is, what product it covers, how or what you need to look out for when you go to a bank, and you must check whether your bank is covered in terms of code. So we do try to reach out in the space or in the areas where the SARB is responsible. Sindisiwe, we do this every day. We sell our country every single day. We have investor calls, we have road shows, and we don't do it as the Reserve Bank only. The National Treasury also does that. The governors were in the US also trying to sell our country. We look at different things. So when you go and sell a position, you look at what has been good. And as the governor said earlier, we've seen so many positives in the recent months. Inflation is low, we lowered the target, no load shedding, we exited the FATF grey listing. We were even upgraded for the first time in so many years. Those are very positive areas where we need to take advantage and showcase as the country. Remember, we are but we are competing with other emerging markets to get the same investor base. So at some point, we have to look at our fundamentals and make sure that we can sell our own country relative to the rest of the emerging markets. Where to invest it will honestly depend on where investors are looking at opportunities. You're looking at fintechs, you're looking at innovation. Do you invest in AI? Do you invest in technology? Do you invest in equities? The space for investment is so broad, and it will just depend on the investors, whether they prefer short-term investment, longer term. But we do have, as a country, we do have potential, and when we go to these investor roadshows, we showcase those, and you can see it from the investment that we get coming through.
Thanks very much, DG Modise. Can we take the last round of questions, please? And we have a gang here. Can we get the mics over here, please? Okay, so everybody in that row that has a question, please ask it.
The other mic must be at the back.
Yes, we have questions right here at the back. Yeah.
We'll get to you at the back. Can we just get these ones here in the front? Thank you.
Good evening. Okay. Good evening, everyone. My name is Masilo Khafani. I'm currently studying financial services operations at the University of Johannesburg. Given the significant impact of energy instability on South Africa's economy, do you see fintech playing a role in improving efficiency or resilience in sectors like energy? And how can students position themselves with the right skills to contribute to such cross-sector innovations within institutions like the South African Reserve Bank? Thank you.
Thank you.
Evening, everyone. Lebang Kwana, Soweto Parliament Deputy President. I would like to ask that, given the persistent decline in household disposable income and high inflation, what concrete accelerated steps is the Reserve Bank taking to unlock regulatory framework for cooperative banks? Specifically, how will the Reserve Bank assist in enabling co-ops to operate as investment vehicles for manufacturing and retail in high-density areas, such as Soweto? And also, Soweto has a population bigger than most cities within the country. So in that, also, I would like to understand that how is the Reserve Bank intending to pivot its cooperative banking sector strategy to allow financial cooperatives in townships to, as investment arms for manufacturing, rather than just acting as, especially for, to the latter speaker who spoke about stockfiles, to assist those stockfiles, to remove all the red tape, to assist them to become cooperative banks so that they can be able to assist in becoming a vehicle rather than just being a saving vehicle for the banks. Lastly, with the buying power shrinking, we cannot rely solely on these banks that are actually outside our society and not understanding our dynamics. So that accelerated thing that I've been asking about, especially for the cooperative banks. So we would want to understand that what are you doing to accelerate licensing and to allow us to legally invest in building local factories to support retailers and allowing to keep our money circulating within Soweto? Thank you.
Thanks, Ntate Nkwana. That's 3 questions, so you've eaten up all the questions for everyone. The lady, I'll take the last one from you, ma'am. And then those who didn't get to ask, we will still have the panel members outside, so please just reach out to them outside for your questions.
Good evening. My name is Ntabiseng Munacheng.
Okay.
My question is very light. Thank God. I just want to firstly thank the Reserve Bank. This is my 3rd year, and I have to say, every time I've come, it's been so much better. I've learned something new all the time. Thank you for the pay sharp. Previously, it was the Bitcoin and explaining and the governance around it. Thank you so much. There's a lady who's a professor that had said that she was able to do something, which I found interesting. This lady, she's a doctor. She's been to Sweden. She was in the news recently. Then she had said that she could get the bank to open an account, right? In this account, the public, South African citizens could deposit money. And then she would be able to match that money in order for the African child to improve themselves. And she even claimed that her thinking, if we don't come on board, she could even take it to other African countries. I want to know that, how feasible is that thinking? Can somebody actually open a public sort of bank account where we all contribute? Because she said that we could also ask for the statements at any given time, and we would be able to see how this account is doing. Thank you.
Thank you, ma'am. I didn't get your name. Ntabiseng. Thanks, Ntabiseng. Panel, over to you.
No, can we take the last three at the back and then we
Okay.
can continue the interaction?
Thank you. Good evening, everyone. My name is Lungit Dolama. I'm from Mfulo Central, just down the road from here, corner house. My question is largely about technology. How are we leveraging technology to advance our cause? Where is the research and development? Coal is everywhere. Why are we not researching? Why are we not researching enough? Botswana's diamond industry is on its knees because of technology. Gold went above 5K at some point, and I sort of figured out I need 3 ounces to cover school fees. So, and mine dams are everywhere. So why can't we leverage technology to remine and rehabilitate the tailings? FinTech. We have students that are rejected year after year because of funding. Why can't we use FinTech to solve that problem? Who is investing in the tech infrastructure? I'm deliberately not saying AI for a reason, because that's another different topic. Who is investing in this infrastructure? Why must we wait for Google and Microsoft? I mean, we're complaining about oil, but there's EVs. The richest man in the world is South African. Personally, I've been incubated 3 times by the Innovation Hub, the Soweto Project, and the Johannesburg Chamber of Commerce and Industries. Out of these 3 institutions, none of them have given me a product I could have left with. Everything has been self-funded. So where is our tech hub in Johannesburg? Everybody is investing in white companies in Cape Town. Thank you.
Thank you, Lungi. Do we have another question at the back, or are we done?
Yes.
There's one more.
Hello? Oh, yes. Thank you. Good evening, governors. I'm Simon Dlamini from Malandela Energy. It's just a quick one on energy. We know we have energy crisis and outages. In terms of the policies of the Reserve Bank, domestic markets like in Soweto, we have so much outages, and units, household units, don't have enough or access to alternative energy. I've seen big banks like Nedbank, etc., are already promoting alternative energy through, as if you are buying a car, but you'll pay over a period of time. But still, domestic units in the townships cannot afford. So how can we sort of alleviate or assist accessing and then kickstarting that energy economy, alternative economy in Soweto? Thank you. I'll leave it.
Thank you, and Dr. Simon. There's one last one there.
Speak.
Oh, yes, you can go ahead, sir. Thanks.
Good evening, everybody. My name is Reina Ramito. Mine are very simple, Governor, and the team. The first one is, can the issue of red tapes, especially onto small companies, be taken into consideration? Because if the ground can be leveled, the issue of unemployment can also be addressed by that. That's one. The second one is regarding the issue of home ownership. So many people, unfortunately, they qualify, actually they are employed, but they no longer qualified for either home loan or a mere RDP. So how do we maybe, in a way, entice, let me say, the financial institutions to try and maybe give these first-time homeowners an opportunity, like trying to maybe try to treat them differently from, let's say, home investors. I mean, we've got people who've got 5, 6 or more houses. Can we treat the first-timers differently from those people?
Bring the microphone closer.
Can we treat those first-timers differently from those who have already been around? Because, you know, without a roof, as a nation, we are heading nowhere. Maybe if maybe if the Reserve Bank can take that into consideration. If not, then maybe liaise with departments such as housing and blah, blah, blah. So as people can have rooms on, over their heads. And then lastly, thank you for a seminar such as this. But honestly speaking, I don't think this is a true reflection. Soweto, it's a big area. And most of the people who are here, they're not from around here. What I'm trying to say is, can we do better with the marketing of such sessions? Yeah. Can we involve each and every? I mean, we've got things like community radio stations. Can this be publicized? Can, you know what, can we be as many as having to stand outside or going to maybe what is the new stadium arena of Orlando? Thank you.
Thank you, Ntate Ray. Okay, we've got one final question, but we also have a question from online. So can I ask that you please keep it brief?
Good evening. I am Lesetja Kganyago, an economics educator in Enka Comprehensive High School. Before I ask my questions, I have 2 questions. I share the same sentiments as Untabi Singh. We really do appreciate these seminars. I've also been attending these forums, and they've greatly enhanced my knowledge of economics, so I'm grateful for that. So my first question is, the inflation target, is it a done deal? Is it confirmed? Can I go back and tell my learners to ignore what's in the textbooks, that the 3 to 6% range is no longer there, it's now 3%? Is it safe to do so? Secondly, this question is not on the functions of the MPC, but I believe you are in a position to answer this question because, I mean, the SARB is a banker of banks, right? And my grade 10s asked me this question a few days back, and I tried to answer the best way I could, but I will ask it here in this platform because I know they are listening. Just on a lighter note, the question is, how do you start a bank? Thank you.
Thank you, Minentle. We've got a question from online from Matthias Rabello. Matthias wants to know, what is our assessment of the March CPI that was released today? Does it reinforce the benign pre-shock initial conditions, or are there already signs for concern? So I will take all the compliments, thank you, and then I'll hand over the questions to the panel.
Okay. DG Wampo, you will deal with all the fintech questions and the energy too. since they are related. And then, of course, Fundi is still popular. Who wants to deal with that? Oh no, the red tape also belongs to you because they say there's a red tape in getting banking licenses and you must speed it up and you must also answer the learners' questions. How do you start a bank?
The governor, how do you start?
No. I have got my own. I've got my own problems. I have my own problem. Do you want to deal with Mateo's question? Mateo's question, the one online that talks about the shocks and so forth, and then let me take the most difficult one, which comes from Miniente. The simple question is that the 3 to 6 target is gone. It's history. There is one target now. It's 3%. So you can safely tell the learners that the inflation target for South Africa is 3%. And there is a tolerance band that it might fall below by 1% or it might be above by 1%, but the target is 3%. That's where we would like to see inflation. That is the most difficult questions. I'll give you guys all the easy questions.
So Minentle, in truth, those two are the banker of banks. I'm just the supervisor of banks. But they are the banker of banks. So how do you start a bank? So you need a license to start a bank. You need permission to take deposits, as I said. But you need to have money of your own to start a bank. You need to show me that you got enough money that I can trust you with other people's monies. Because for you to start a bank, you are caretaking deposits. So I think that most of the time when we talk about banks, we think banks are lenders of money, but they are deposit takers first. They're taking the deposits of others, so they need a license. And for them to get the license, they need what we call capital, which is their own money. And they need to have a minimum amount of money for them to receive a certain category of banking license. They also need to have the caretakers of the money. And there are two caretakers of the money. The one is the management, the people who run the bank, and then the others are the board of the bank. The board of the bank has oversight over management. They make sure everything is done correctly. So we talk about the safety side. They make sure that your money is safe. And then there's the soundness elements, which is them making sure that there's enough money in the bank so that when you go to your ATM, you can withdraw money. So that's the short version of your learners' questions. But there are pieces of law that dictate the type of banking licenses, which brings me to the questions that we ask. So let me start about fast-tracking a banking license. We really have to be responsible because when we give an entity public funds, there is a risk element, and they need to be treating those funds with care. And there's a minimum level of knowledge that is required in terms of investment knowledge, in terms of just caretaking and the overall risk management that happens in the running of the bank. Earlier, I spoke about this asset and liability management matching. So when we are taking the application for a banking license, first we look at the capital. And the capital is important in terms of who the owners of the bank are going to be. Do they have money today? And then we have to ask the question of, will they have money tomorrow if something goes wrong in the bank to put in? But in the space of a cooperative bank, the depositors are also the owners of the bank. It is a member-owned bank. But we need to have clear rules on how do we treat members as depositors because they have rights as depositors, and as members, what is the shareholding portion. So a lot of time is spent assessing those things. And the people who are going to be the caretakers of the bank, who are we going to have on the board of this cooperative? And now I'm going to use my colleagues here. I might like Rashad, but actually he might not be the best money manager in the world. And if in a cooperative I feel, but I trust Rashad and I want him to represent me, the Prudential Authority might say, no, Rashad's not the right person. Mampo is the person because of these reasons. And these are the things that take time, and they need to be made carefully, these decisions, because they do have an impact at the end of the day on the success of the bank. We want to put people who have the capability to run the institution so that the institution has a fighting chance to succeed. So yes, there is scope for us to look at how do we improve things so that we do things faster, but we cannot skip steps because that's important for safeguarding the money. So the second issue that you ask is about cooperatives becoming an investment vehicle. Now, if you are a small cooperative financial institution and you are a common bond institution, everything that you should be doing should be for your members, sir. That's what a common bond means. You only lend to your members. If it so happens that your members own factories, then that is fine. There is no rule that says you cannot lend to your members that own factories. What you cannot do, though, is you cannot jump outside of your common bond to lend to people that are not part of the common bond. And this is often the point of friction. When you get to that stage and the entity is larger, you need to then come and apply for a different type of license that will allow you to lend to people that are outside of your common bonds. You can, however, while you're part of the common bonds, you can invest in the factory, but that's an investment. It's not you lending money to the factory, but again, you have to be sure as part of sound financial management that that factory has the ability to pay back the money because you have to protect the deposits first. So I hope that answers your question. In terms of just dealing with red tape, we are always looking for ways to improve things and for continuous improvement inside the Reserve Bank. That's our answer to the red tape question. However, we cannot jump steps because when things go wrong, these things are very important. We have to go stand in front of Parliament and say, what went wrong? What did you do? Something went wrong with this financial institution. And the law has got specific requirements on what we have to do. So we cannot skip what is legally required of us. Otherwise, we will be in breach of our duties and our responsibilities as well. I hope that helps. I don't know. Maybe, Mampo, let me hand over to you, and then I'll see if I skipped a question.
Yes, you skipped the red tape.
No, she I must come back to the home ownership.
Okay, home ownership.
Moving right along. So the fintechs, they're not playing a big role because of the energy crisis. They have been playing a role, and we did a fintech study in 2019 to assess how are they growing, what type of fintechs, and we're currently now reviewing the study. So basically what we found is that there's different types of fintech, they play a different role. There's fintechs that are in the payment space, there's fintechs that are in insurance, infrastructure, crypto, investment savings, and basically what we've realized from the study is that some of these fintechs from 2019 to now, they've closed. Some are still operating, and in the surveys or in the interviews, we were asking them what are the key reasons or what are the main reasons why you're closing. And basically, the regulatory burden and compliance was one of those reasons. The second one was profitability, others related to consolidation and exiting. But I think for the Reserve Bank, from that study, then we realized that there are some of the things that we can do to protect the fintechs. And the first thing that we did is in Rashad's space, where He's done a lot of work in the payments space to make sure that at least the fintechs can access the payment system without going through the banking system. That initiative is helping the fintechs a lot. And in my space and DigiFundi space, we are looking at reviewing the regulation. We have to balance innovation, but also protect the financial system from risk. So what we're doing is we're looking at the current regulation. We know that it is too tedious for a small fintech to adhere to, for example, regulations in a big bank. So what we're doing is we're looking at within those regulations, what is fit for fintechs, what is it that they need to do or comply with to make sure that they don't pose a risk to the system. However, what is it that they don't have to comply with so that we don't choke innovation? So for us, fintechs are critical. They are in the space, and we need to create an environment for them so that they can operate while, of course, we're thinking about financial stability. So it's not an issue of the energy. We have been thinking fintech. We have been implementing reforms to make sure that the fintechs are functioning well.
Okay, can I?
No, you will come back. I want
Later.
David to tell you with Matthews.
Oh, great, thanks. Yeah, so I got that question, how do we read today's inflation report? So at 10 o'clock this morning, Stats SA published an inflation report for March. It was 3.1 on headline. If you're sitting there with a 3% inflation target, 3.1 feels pretty good. And that was in line with our expectations. Core inflation, so that strips out food, fuel, and electricity, that was at 3.2, a little bit worse than we expected, so some pressure in core. One or two things in services were driving that, like housing and hotels, hotel accommodation. So perhaps something there to worry about a little bit. Food prices, there was a little bit of a downward movement in meat, which is something we've been waiting for, and so that was good to see. But we know very well, this is a backward-looking report. There is a very big fuel price shock that's going to come in that April report. So, this is the thing about looking at previous data. When events like this huge shock blow up, you know that some of that old data just doesn't tell you that much about the state of the world anymore. Still, I guess if you're going to go into a shock and you're a central bank with an inflation target of 3%, for your last two reports to be 3.0 and 3.1, suggest you were at least hitting the target before someone else did something horrible to you. Thanks. Yeah.
Okay, on home ownership. So the choice on who to lend to and the type of lending product, that is the choice that is made by each financial institution, and they will look at the risk of the customer. But what I can say to you is, and this is something that we don't dictate as the Reserve Bank. We don't tell banks what to do around their mortgage book. But we have started to see mortgage book lending is improving once more. What we saw during COVID was that when interest rates are lower, of course, banks are more likely to lend. But banks have also gone through a difficult experience around the 2010 period, where they had a lot of housing stock, where people were buying second homes and other things. And so when customers were unable to pay, the cost of repossessing a house is a very large cost for banks. And so banks went through a period of time where they were managing the housing stock that they had, because remember, they are the owners of all of our houses that are bonded. They belong to the banks, they don't belong to us. So if something goes wrong, it's up to the bank to figure out who else to sell this house to, and that is a big administrative layer. What we have seen with the newer banks that have come into the market, some of them are running their home loans through a third party. They're not doing it directly. Some of them use other entities. I don't name entities here because I don't want to give them free advertising. What we're also seeing is some creativity in terms of what some of the banks are offering, which is some of them will not call it a home loan, But if you go to them with a house plan, they will say you can go to build it, and they call it a purpose loan. You go to build it, you'll get the building material at build it, and so it's still an unsecured instrument, but they have partnered with a sort of a company that sells building material for you to get a loan there for you to build your own house. And so I think when we're thinking about home ownership, there are going to be different solutions that help us to get to the home ownership equation. What is encouraging for us is that we are seeing banks that don't have an appetite for home loans trying other things that will give different types of customers different types of access. But this is not an easy area for us to comment on as the Reserve Bank, because it is the bank that must assess the risk profile of the client. The second thing that we are seeing banks doing is that as they are investing in technology, they are using different ways of trying to understand the customer risk profile. So if, for example, you are Fundi and you have a full-time job and we know you work at the Reserve Bank, that might give the bank some comfort. But some of us who are running our own business, banks might have a question mark around how this is working, but we are seeing in other countries different ways in which banks start to assess how creditworthy customers are, and some of them are using different tools to try and do this so that they have a good picture of you as a customer, so that it's not just one type of indicator that they're using for them to assess your risk profile. That's another encouraging area. But as we talk to financial institutions, we will continue to probe this question so that when we come back here next time, we have better and more intelligent answers for your questions. Thanks.
Thanks.
Okay. Well, there was a thing about energy which all of you ran away from. But we are seeing similar innovations that the banks will begin to package the domestic solutions when you buy a new house, that they would ask that you put a solution, a solar solution or something like that. But housing policy falls in the Department of Human Settlements, but I can just mention that this is what we actually see. There was the thing about innovation and somebody being incubated, and that is good. We do have an innovation hub in the Reserve Bank. Understandably, it's for people who are looking for solutions in the financial sector. We have a regulatory guidance unit. You were worried about red tape, that we would guide them and says, this is how you go through this. And they call this sandboxes. There's a sandbox where people can come there and experiment with their solutions, and then they'll get regulatory guidance, and hopefully they get through. But we do not provide funding for it. We only provide the space for people to go through that. Last year, South Africa hosted the G20. And as part of the hosting of the G20, we ran a global competition jointly with the Bank for International Settlement. That competition was entered into by 120 companies around the world. A small township-based company from South Africa won the international competition. It was not a big prize money, but the fact that they had the solution there, they are able to say to the bank, I have this solution, it won an international award, can you fund it? And that for me, it was something. There were a lot of other solutions. In that fintech space, we see people who are coming with innovative solutions, including for spaza shops and for this. And I hope somebody gets a solution for Stockfells, because all these people are also are also creative. And then there was the issue about marketing. Where's Faraya? Faraya, Matati, stand up. Zianda, Sarah, stand up and face that way. So stand up and face that way. Stand up and face that way. Talk to these people. They are the guys who are under marketing me. So we do. They do put an effort. After the session last year, there was a request from the business sector in Soweto for a dedicated session with them. That session was held, and it all had to do with banking and how it works and so forth. We are happy to repeat it because we only covered that number. But it was a proposal that had come from this forum. So if you have any further proposals on how we can improve this forum going forward, those are the ladies you talk to. Forget the men on this platform; they are not going to help you much. With that, Sowetan, over to you.
Governor, there was one last question from Tabi Singh about the lady that opened a bank account and...
Is it possible? Yes, but that is exactly where we are getting to. So, if this lady can open a bank account and ask all of you to deposit money into her bank account, why don't you open yours? I leave it there.
Thank you, Governor. Can we give our panel a round of applause? The proud Sowetan would like to thank all of you for braving the rain and joining us today, and those who joined us online, thank you. If we didn't get to your questions, we still have the panel here after the event ends, and you can still ask them 1 or 2 questions, not 3, just 1 or 2. But thank you, everyone. It's been wonderful being here, and we look forward to seeing you next year again. So, gentlemen, we've got refreshments for you outside, so please join us for those refreshments. Thank you.